Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical structure level for this market and is currently in the process of rejecting it to the upside. We can notice, in fact, how this zone was acting as very strong historical resistance in multiple occasions. Every time the market tested and rejected this level to the downside, then we had the break above the zone with this impulse. And what we know is that if we have a very strong level of resistance, which has been respected by the market already in multiple occasions, after the market breaks above that zone with an impulse, at that point, all that previous resistance becomes support. So what you expect at that point is for the market to go and retest that previous resistance turn support and then to reject it to the upside, which is in fact exactly what the market has done here, because first the market respected this level as resistance in multiple occasions, then it broke above that zone, and at that point you would expect a retest and a rejection to the upside, which is in fact exactly what the market gave us here. We can also notice how now we have a new trend, because as the market is pushing to the upside, is creating a series of higher highs and higher lows. That is the definition of an uptrend. No market can just go up in a straight line. Every market will need to create higher highs and higher lows. So essentially a series of impulses and corrections, which are the definition of an uptrend itself. Because when you have these corrections, there is the possibility for new buyers to step into the market and push the price higher, potentially institutional buyers. And we will be speaking about whether or not institutions are currently buying gold in just a few minutes when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the weekly time frame. Now, here on the weekly, we can notice how the market at the moment is currently moving in a triangle formation. However, so it is basically consolidating. However, it seems like now the market is breaking out to the upside. We had first a very clear uptrend with the market creating higher highs and higher lows. Then the market started creating lower highs and higher lows, so basically creating a triangle formation. And now the market is in the process of starting the next potential move upwards, which at that point would also continue the uptrend that we have just developed. Just notice that the market has been developing from a monthly standpoint. So there is a possibility for the market to create yet another monthly higher high. So to continue with the uptrend. So let's keep all of this in mind and drop down on the daily time frame. Now here on the daily, I did speak about gold a few times in the past few days. I spoke about it when the market was creating this M pattern. The market was here, and I explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. Then after this impulse, I explained all the reasons for which we could expect a retest of this level here, and then for the market to reject it to the upside. And again, that is exactly what the market gave us. And with the very last analysis, I explained all the reasons for which we could expect a correction and the continuation to the upside, which again is exactly what the market is currently providing to us. And by the way, I will link in description all those previous analysis, so you can go and check them out for more free education. But at the moment, what do we have? Well, before we dig deeper into what we have here, from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. And let's go and check the data precisely for gold. Now, what we can see here is that with the last reports, we have seen a massive increase of the net positions. We went from 234.3K all the way up to 254.9k net positions. So we had a huge increase of net positions with institutions moving back to the bullish side for gold, with the last report showing 2,300 longs added and 4,900 shorts getting closed from an institutional perspective on gold, reaching 291k longs compared to only 36k shorts. So there is a massive amount of longs compared to shorts from an institutional perspective on gold. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, in a situation like this, the important level that we have to be monitoring is this high. From a purely structural perspective, until the market will remain below this high, it can easily continue lower. However, a break above this high would make this uptrend from a daily perspective intact and would essentially create a new daily higher high and also make this previous daily resistance at that point turn support here. So if we do get this break on the retest of the previous resistance turn support, here we would have confluence of support because we would have the previous resistance turn support and also the Fibonacci taken from the low to the high of the impulse leg, aligning with a 0.32 or 50% retracement, which at that point would essentially create a confluence of support zone. And when there is a confluence of support zone, there is an increased probability of seeing more institutional longing, especially if institutions are already longing, as we can see from the data. So in a situation like this, if we do get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COD data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot the special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.